Hello traders. Welcome to an episode of Trade Smart. Today's subject, traps. In the Forex and stock market, traps happen a lot. They happen because traders react to the market without being prepared. When a trap shows up, traders often rush to buy or sell without thinking. But then, the price suddenly goes the other way, following the main trend. When this happens, their positions provide liquidity for the large players, allowing them to grab a better price and continue the trend. And, remember, the rule of the trap is, if it looks simple and easy, then it is a trap. Now, before we look at the charts, let's use some common sense. Imagine we can control the market and want to buy at the best prices. How could we trick other traders into selling to us so we can buy from them large quantities? So, these are the prices. Remember, we want to buy cheap. Let the uptrend start. We begin buying, causing the price to rise as expected. Now, everyone notices this uptrend and wants to buy too. But if everyone starts buying, it could make it harder for us to buy in large quantities. So, we need to create fear, making others believe it's a sell and not a buy. This way, we can continue buying at advantageous prices without attracting too much attention. At $50, we find a resistance area. Knowing that the price will eventually reach $500, this presents an ideal opportunity for us to set a trap. By convincing others that this resistance will push the price lower, we can encourage them to sell to us more willingly. As we said, we can control the market. Let's make a trap. First trap, resistance level broke and everyone is buying the breakout. Second trap, buyers get stopped out, and everyone sees this as a fake out at a resistance, so they sell. Furthermore, the price falls even more, reinforcing their belief that the resistance will hold, leading them to place even more sell orders. Now that our trap has worked and many people are willing to sell to us at the low price of $50, we happily buy and drive the price to higher highs. Our trap worked perfectly. As you can see, we've just used a resistance level to execute a trap, a strategy that happens often across all time frames. Grab a pen and paper, and imagine yourself in control of the market, setting traps. You'll soon realize that many of these scenarios play out on the charts. Now, let's explore some real-life examples. In this example, we're in an uptrend. But, as mentioned earlier, since it's obvious that it's an uptrend, everyone wants to buy. That's why we see this particular candlestick here. Before it got rejected, it was a fully red, aggressive candle, making many traders to join the selling side. By assuming that the trend line had broken and it was time to sell, many traders jumped in. However, the big players were quietly absorbing all their sell orders. Just picture the same price scale as our previous example. Now it becomes clearer. The smart money trapped a lot of people into selling at the premium price of $50. And indeed, they bought, leading to the rejection of this candlestick. Afterward, the price dropped, but slowly. Yet again, we encountered another trap, with another bearish candlestick attempting to break the previous support. This triggered more sell orders, which were also absorbed, causing the price to skyrocket to new highs after the big players once again obtained their premium price. Here are some simple steps to keep in mind. Step 1. Identify the trend. Step 2. Wait for the other side to get involved. Step 3. Observe when the other side starts making moves. Step 4. Pay close attention to price action and identify when the big players have achieved their objective. Step 5. Use your trading strategy to enter the trade at the best possible price, similar to our $50 example. And never forget that the rule of the trap is, if it looks simple and easy, then it is a trap. Now, it's time to put your new knowledge into action on the charts. If you have questions or insights, feel free to share them in the comments below. Give that like button a tap if you found this helpful, subscribe for more hands-on content, and of course, trade smart. Thank you for tuning in, and I look forward to seeing you in the next video.